Hey, welcome back to the Flex Free Game channel. If you're new to the channel, this is where we give you free game on the stock market. Whether you're an entrepreneur or working professional, we really want to make sure you have the information you need to be successful and really start to see that portfolio grow. So today we're going to be diving into the April 2025 Consumer Price Index Report, or the CPI report, and really examining how the markets have responded over the past few days and discussing strategic moves you can make or consider making within your portfolio, and touching on a couple of things that I like right now, cover calls, and maybe even be looking towards some opportunities for volatility trades. So stay tuned. If you haven't already, hit that like and subscribe button, and let's go ahead and dig in. All right, so here are the highlights from the April CPI report. The Bureau of Labor Statistics reported that the CPI rose by 0.3% in April, this bringing the annual inflation rate down to 2.3%, actually getting pretty close to what the Fed wants at that 2% rate. And it actually was the lowest rate since 2021. Now, this decline suggests that inflationary pressures are easing, providing some relief to consumers and investors alike. So all good news when it comes to the market. We've been talking about inflation for a long time now and starting to see that inflation ease a little bit, and hopefully getting to some rate drops could, spark the market and get us going in a nice direction. So how did the market react to the CPI report? So over the past few days, the market has responded positively. The S&P and NASDAQ both extended their gains, and that actually was helped out by some of the tension or trade tensions easing, particularly after U.S. and China agreement to reduce mutual tariffs. However, analysts caution that it's premature to determine the full impact of the recent trade policies on prices. So we still want to keep paying attention, make sure that, these tariff decisions continue to move forward, and nothing changes with that. Because if we do get some different news on tariffs, if they're increasing or more countries get involved, that could be something that throw some more uncertainty around the market and causes the market to get a little ugly. So make sure we're paying attention to that. So what does that mean for the market in the short term? So looking ahead at the market does face some potential volatility with the upcoming options expiration on Friday, May 16th. So a significant number of bullish call options are set to expire, and this could stall a rally or trigger renewed volatility within the market. So additionally, while inflation appears to be easing, the full effects of recent tariffs may not be yet reflected in the data. So that suggests we should have some caution around upcoming numbers. If there are some other impacts that tariffs will have to the data, we could see some changes in really the sentiment and also what the Fed decides to do. So we want to make sure we take a look at that. Also, with those options expiring, we have seen things on a run, but we know when the big money moves, it could impact the market. So we want to make sure we're paying attention to that as well. So we'll take a look again next week to see how things kind of shape out after this May 16th deadline. So moving forward, a couple of things that I like, and I kind of mentioned them earlier, is cover calls. It's one of our staples here within the program. So with cover calls, it's a great way to generate cash in the market. When the market is stagnant or going down, you can still use them, but this trade actually really goes into full effect when the market is in an upward movement, because not only can you take in the premiums from the call options, but you also can put in some additional growth and take in some additional capital by putting your calls a little bit further out of the money and taking advantage of that. So again, if you are new to cover calls or you'd like to learn more about cover calls, you can get access to our case study by putting flex in the comments below. Go ahead and put that word flex down low, and we'll send you over a link to our case study where you can take advantage of it. It also gives you some more information on exactly what we do in the program, and if you want to go further and book a call with us, you can do that too. And then the other trade I want to talk about is volatility trades. So when the market is in a positive movement, and I think it's still a little bit early to jump into volatility trades unless you're seeing a stock that's really taken off. I like to see the market overall being a little bit more of a positive situation for a longer period of time. And so this is more of just what could be around the corner, something you could be looking forward to in terms of trades. But with volatility trading, what we want to do is we want to take advantage of the sharp upward movements in stocks. So what you want to do is you actually want to buy some shares. You want to buy them close to the end of the day, end of the market, and hold them overnight. So it's kind of a short-term swing trade. And when these stocks move the next day when the market opens and you have the volatility, the highest amount of volatility in the market right when that bell rings. You can really take advantage of it, get in and out of some trades, taking some cash. And the cash that we're generating from cover calls as well as volatility trades is cash that you can use for funding your long-term investments, right? So we want to use this as a system to continue to grow our account. So again, cover calls I really like right now. You can go ahead and implement those. Volatility trades, I probably wait a little bit longer just to make sure that this positive sentiment around the market remains for a little bit longer. But that is another one that you can go ahead and access here pretty soon, unless we have the market, some bad news and the market turns in a different direction. Now, again, if you want more information on that, go ahead and put Flex in the comments below, and let's go ahead and move on. So the takeaways and what to watch for. So the April CPI report indicates ease of inflation, but the full impact of recent tariffs remains to be seen. So again, we are seeing some good news around inflation, but we do want to wait till the data comes out to price in these tariffs and see if that does impact anything. So be on the lookout for that. The markets have reacted positively, but upcoming events like options expiration could introduce volatility back into the market. So again, let's pay attention next week as we see when those options expire and see how that impacts the market. And then again, strategies that you can start to implement right away are cover calls. And then if we continue in a positive note, saying the tariffs get priced in and we don't see any reaction or uncertainty come back in, and we continue to see things move forward, then volatility trades will be something we can go ahead and start to implement as well. So that's going to wrap it up for today. Hope this helped you out. Again, if it did, go ahead and hit that like and subscribe. You can stay tuned for our upcoming sessions, our upcoming calls, and we'll see you on the next one. Have a good one.